Hello, very good morning to all, and welcome back to a brand new week. I'm Kelvin here again. Good morning. Today will be Monday, the 25th of August, 2025. So, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into those short-term intraday technical analysis or outlook on the broad-based cross-asset classes, let's have a quick review and recap what has taken shape on last Friday in today's early Asia session in terms of economic data release, key events that has a significant impact on the short-term IE/intraday movement of these broad-based cross-asset classes that we cover on a daily basis. So on last Friday, the key risk event, which I mentioned on during last week daily doses, will be the Fed Chair Powell, his last speech in this annual Jackson Hole Symposium. And in this Jackson Hole annual symposium is where potentially in the past the Fed chair tends to signal his latest monetary policy guidance or stances going forward. So on last Friday, Powell mentioned that he actually shift from his previous rather stubborn wait and see approach. And for those who have been monitoring his public speeches, he tends to sway more towards the fearfulness of sticky inflation remaining persistent in the US economy due to the uncertainty surrounding the effects of the current US White House administration complicated way of implementing tariffs. But however, interestingly, he shifted his wait and see approach stance to a more dovish side of the camp. And based on the overall speech and his tonality, he implied an open door for impending interest rate cuts, citing labor markets softness. Right. So based on what he mentioned on Friday, last Friday, Powell pointed to the rising risk of labor markets, the U.S. labor markets, after that disastrous NFP print that was out 2.5 weeks ago, citing the very weak employment data for July, which shows jobs growth in the recent months was substantially weaker than previously reported. And he also did mention that the downside risks to employment are rising. And he also acknowledged that policymakers, which is his colleagues, must guard against the prospect that US President Donald Trump's tariffs may lead to persistent inflation. So he also did mention that this inflation risk is still on the horizon. But what interesting over here is that towards one portion of this speech that mentioning about inflation, potential of that persistent inflation from Trump tariff, he mentioned that, but it's reasonable to expect that the effects, that means the effects, means the tariff effects, will be relatively short-lived. So because of this mention of this relatively short-lived about the inflation risk or fear that Fed chair has had in the past has starts to get muted, and his speech now surrounded or pay more emphasis on the weakness on the US labor market. So that actually potentially increase the odds of that September interest rate cut, and also potentially increase the change of tonality and stances by Fed Chair Powell, a shift from a rather wait and see approach towards a much more interest rate cut approach. That means, i.e., he actually hinted right now the Fed is on the imminent start of a potential interest rate cut cycle, given the fact that they have been holding interest rates since the start of this year. So that created a very strong risk-on rally on the backdrop of a sell-off in the US dollar. So if you look at the major US stock indices, all of them close in the green. And I want to highlight particular the Dow Jones Industrial Average. So the Dow Jones Industrial Average, I've been mentioning that this is the outperformer that we got to keep a close eye on if the Fed were to actually starts to cut interest rates over here. So indeed, the Dow Jones Industrial Average rallied by 1.9%, far more than the percentage gain on the intraday basis on last Friday on the Nasdaq 100, which is up 1.5%. Similar magnitude will being seen on the SPX 500 as well, up by 1.5%. And what's interesting over here is that the Dow Jones Industrial Average managed to clear above that 45,100 level, 45,100 level. So that is near the current all-time high that was printed in December. So that's already been cleared up. So the Dow Jones Industrial Average has finally made a fresh all-time high on last Friday. And also the Russell 2000 also outperformed against the SPX and the Nasdaq 100 on the backdrop of an intermediate or potential start of a interest rate cut cycle by the Fed by rallying close to 4%, to be precise 3.9%. And with that backdrop, like I mentioned, is that the dollar also sold off. Okay, very interestingly, so you see this is a big sell-off in the US dollar upon the change of tonality from Fed Chair Powell, Fed Chair Powell on last Friday. So we see a dramatic sell-off in the US dollar across the board, and this is based on the 5-day rolling performance as we are speaking right now. And if you look at the 1-day rolling performance, taking into account of a shorter duration hours, I mean, it's like a 24-hour moving window. Initially, the dollar rebounded at the start of today's Asia session. Okay, there was a bounce over here. So if you look at my screen, let me highlight the one in vertical line. All right. So this is the start of the Asia session at about 9:15 a.m. Singapore time. There was a bounce in the dollar, and what we could see over here is that the bounce in the dollar yen and across other major currency has starts to tweet or wither downwards as well, or starts to ease off as we are speaking over here. So indicating that today's early Asia session bounce at the start of the Singapore trading hours, which is around 9:15 a.m. that rebound in the dollar that we see at the start of today Asia session is potentially a minor corrective rebound in the backdrop of a much more pronounced dollar weakness potentially going forward. So later I'll share with you guys the intraday technical outlook chart on the new levels to watch on the 4 major US dollar pair. And also with the weakness on the dollar, we also start to see gold rebounding as well. But unfortunately, the rebound in gold is still stuck within that sideways range configuration that has been in place since the fresh all-time high of 22nd of April. So this is what I mean. So let me open up the chart of gold for you guys to take a look. Okay, so this is the chart of gold over here. So what I could see is that since 22nd of April, it's still being congested in this complex sideways range configuration. And yet, Fed Chair Dovish speech last Friday managed to see a bullish reintegration back above the 20 and the 50-day moving average after he has been after gold price spot gold XAU/USD has traded down below it on last Thursday, the previous Thursday, which is on 14th of August. So it seems to us that it may start to float back up to towards the upper limit of the range again. But however, it's still having not a clear trend bias yet because it continues to trap within this sideways range configuration. That means, i.e., since gold price is being a sideways range configuration, we may continue to see very vicious short-term intraday swings between this medium-term broad-based complex sideways range configuration that is still in place for gold XAU/USD since the fresh all-time high of 22nd of April. So later I will take you through the short-term levels to watch out for gold for today in my second segment of the daily dose. All right, so now that is the key highlight I'll share with you guys that has taken shape on last Friday. And in today's Asia session, there is no key event or indicator that has been released yet in terms of economic indicator that released yet. So let us now move on towards the second segment of the daily dose, which is the intraday technical outlook on those broad-based cross asset classes. So let me expand my screen. All right, so let me start with the FX market over here. All right, so just 1 second to make sure that the screen is up and running. Yeah, it's up and running. All right, so let me start with the euro dollar. So euro dollar, still recall on last Friday, we do have a bullish bias ahead of Fed Chair speech in the Jackson Hole Symposium. Price action rebounded exactly at our pivotal support level and now reintegrate back above the 20-day moving average, and so broke up stage a bullish breakout above this former minor descending trendline resistance drawn from the minor swing high of 18th of August. So given this bullish price action that's being seen on last Friday, we'll still maintain that bullish bias on the euro dollar. And what's interesting over here is that the euro dollar push up on last Friday paused exactly at our resistance level at 170.30, and this 117.30 is very important. Why? Because this is the minor descending trend line from that 52 previously, that 52-week high that was being made on 1st of July, where price action staged that minor corrective pullback. All right, hitting a low of 1st of August, so it actually paused at that level. But upon pausing at that 117.30 level, the hourly RSI didn't actually shape a bearish divergence. Yes, it hit overbought level, and right now it has started to work out from this overbought level through the exit of this we call it overbought region as in the Asia session as we are speaking right now. So what I could see is more of a minor pullback that is taking shape right now on the euro dollar. So two key support level to watch for the euro dollar for today. First support level will be at a 116.70 level, which is the minor swing high of 20th of August and 21st of August. That was last Wednesday and last Thursday. And the key pivotal support level will be tightened up to 116.45 today. Over here, 116.45. All right, so this 116.45 also confluence with the pullback support of this former minor descending trend line that I mentioned earlier, and as well as the 50-day moving average over here. All right, so it's not big, I don't know, it's accidentally deleted. So this dark blue line here, this is the 50-day moving average, also confluencing at 116.45. And this 116.45, if we do the Fibo retracement of last Friday impulsive up move, it's the golden ratio of that 61.8%. All right, golden ratio as well. So with that, I'll be using this Titan short-term pivotal support level at 116.45 on the euro dollar to maintain my bullish bias in any form of a minor pullback that may take shape today. Next resistance level to watch in the first step after the breakout of 117.30 will be 117.70, 117.79 next, which is the minor swing high area of 24th of July and 28th of July. Only a bearish breakdown below 116.45 will invalidate today's intraday bullish bias on the euro dollar to potentially retest that 115.90 / 115.70 intermediate support level. Next. All right, next up will be the sterling pound. So the sterling pound also rallied as expected over here. So right now, it on the intraday basis on last Friday, it hit 135.45. So 135.45 is this minor descending trend line that is in place since the 1st of July high as well. All right, over here. So with that, I would tighten the short-term pivotal support level for today on the sterling dollar and maintain its bullish biasness in any form of a pullback. First pullback support level to watch will be 134.80. Maximum will be my Titan pivotal support at 134.45. So this 134.45 is also the pullback line of this former minor descending trend line from the high of 18th of August, and also the golden ratio of that last Friday bullish impulsive up move, which is 61.8% over here. So maintain that bullish bias using Titan short-term pivotal support level in any pullback at 134.45. Next resistance level to watch after 135.45 will be 135.90 / 136.10, followed by 136.50 / 136.80 next over here, which is the minor congestion area of 4th of July and the minor swing high of 8th of July. However, a bearish breakdown below 134.45 will invalidate today's bullish bias on the sterling dollar for it to see another corrective decline sequence, retesting last Friday minus swing low area at 134 figure 133.70 next. So that's for the sterling dollar. Up next will be the Aussie dollar. So Aussie dollar managed to float up as expected. So this Aussie dollar continues to trade within this complex sideways range configuration. So oops, sorry. So if you look at the daily chart of the Aussie dollar, it continues to evolve in this expanding wedge range configuration since the low of since the low of April, 22nd of April over here, right? It's in this kind of very complex expanding wedge sideways range configuration. So it managed to bounce off from the lower limit of the expanding wedge sideways range configuration on Thursday. All right, so right now I will tighten my short-term pivotal support level towards 1660 towards 64.55, pardon me, 64.45. So maintain my bullish bias within this medium term expanding wedge sideways range configuration of the Aussie dollar. Next near term resistance level to watch will be 65.05, followed by 65.20 over here, which is the 50-day moving average, and the minor swing high area of 15th of August and 18th of August. Only a bullish breakout above 65.20 potentially may see a further push up on the Aussie dollar towards the upper limit of this expanding wedge range configuration at 65.80 next. However, a price action breakdown below 64.45 will invalidate today's bullish bias to see it floating downwards to retest the lower limit of this expanding wedge sideways range configuration, pardon me, at 64.20, maximum 64 figure slash 63.90, which is also confluence with the key 200-day moving average as well. Okay, so that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen, we do have a neutrality stance on last Friday because given the fact that some other major dollar pair is showing weakness, so it plummeted below the lower limit at 145 figure level, which is back below the 20-day moving average again. So hit all the way down to the resisted support level, which is the 50-day moving average that has managed to support the dollar yen in any form of weakness since the low of 14th of August. So this is indeed a very key near-term support level to watch. So given the fact that right now it already managed to retrace a certain portion of that rebound that has already has taken shape since the start of today's Asia session. And if you do that FIBO retracement from last Friday's sell-off, it's fast approaching the 61.8% FIBO key ratio level, which is also confluencing with the 20-day moving average acting as intermediate resistance right now at the 145 figure level. So given the fact that the rebound has already floated up a fair bit, that means i.e. it doesn't pace us now to have a bullish bias on the dollar yet. So in fact right now I will have a bearish bias in any form of a strength to fit that strength using 145 figure level as my short-term pivotal resistance level on the dollar yen. First support level to watch will be this important intermediate support zone at 14670 slash 14640, which I explained earlier. Only a clear breakdown below 14640 will potentially unleash a much more pronounced intraday weakness on the dollar yen to expose the next near-term support level at 14585 in the first step, which is the minor swing low of 24th of July. Only a bullish breakout above 145 figure level that will invalidate today's bearish bias on the dollar yen to see a squeeze up to retest last Friday high at 14875 next. So that's for the dollar yen. Now let us now proceed to the intraday technical outlook on the major stock indices, starting with the Hong Kong 33. All right, so the Hong Kong 33, last Friday we do have a neutrality stance because the price action continues to evolve within that choppy configuration between 25,270 and around this 24,980 over here, which is the minor swing low of last Wednesday. So finally it managed to did a bullish breakout above the upper limit of the neutrality range. So with that we will now flip to a bullish bias, but do not forget on the intraday basis because this technical outlook, it covers the entire session until the US session, not on an hourly basis. All right, so based on a intraday approach over here, there could be some form of a minor pullback taking shape. Why? Because the hourly RSI has already hit the overbought level and hasn't exit from the overbought level yet, so potentially there could be some form of minor pullback taking shape. So this minor pullback potentially a pivotal support level that may halt that minor pullback will be at 25,490. So I would use a rather tight pivotal support level for today at 25,490. Also graphically, also there's some form of previous resistance turns into a pullback support, got rejected previously on 18th of August. That after breaking out on last Friday at this 25,490, it managed to show that very steep intraday hourly by hourly up movement. So this could be a potential inflection point that may pause any form of a minor pullback, which is at 25,490. And this 25,490, if we do the Fibo retracement over here, taken from the intraday low of 21st of August all the way down to today's Asia session intraday high as we are speaking right now, that also constitute the 50% Fibo retracement as well, very closely. So using a rather tight pivotal support level at 25,490 in any form of a minor pullback, given the fact that right now it's actually challenging the first resistance at 25,890. So as long as any pullback managed to be hold or pause at the 25,490 short-term pivotal support level, we will have a bullish bias on the Hong Kong 33 that's representing the Hang Seng Index. After 25,890, potentially the next resistance level to watch will be on the intermediate basis, will be 26,090, followed by 26,200, 26,350, which is also the upper limit of this major ascending channel from the low of January 2024. However, only a bearish breakdown below 25,490 that would invalidate the bullish bias on the Hong Kong 33 to see another round of a minor corrective decline sequence extending further towards the downside, exposing the next near-term support level at 25,270, maximum 25,045, which is now the 20-day moving average as well. All right. Up next will be the Japan 225 representing the Nikkei 225. So the Japan 225 managed to bounce off as expected from our pivotal support level that we have on last Friday, 42,513, 42,460 level. So no change given that I can't tighten the pivotal support because it hasn't broke above our first resistance very clearly at 43,060. So still using 42,515, 42,460 as my short-term pivotal support, maintain my bullish bias outlook on the Japan 225 above 43,060, exposes the next intermediate resistance at 43,470 in the first step. Only a bearish breakdown below 42,460 will negate this bullish tone to see another round of choppy minor corrective decline sequence to retest the rising 20-day moving average that is so confluencing with the next near-term graphical support zone at 42,000/41,760. Next up will be the Germany 30 representing the German DAX. So the Germany 30 continues to trade above the pivotal support level, but can't have a bullish breakout above the upside trigger level that I mentioned on last Friday at 24,440. Okay, so this level indeed we got to respect this level, all right, because price action already tell us this level there is a stubborn resistance that it can't break through on last Friday. All right, so what I'll do over here is levels still maintain the same. I cannot be bearish because price action didn't break below the 20-day moving average. It managed to shape a series of higher low. So key support level will still be at 24,155. So right, so this will be still the pivotal support for the short-term basis that I'm monitoring. Still maintain that bullish bias. So this bullish bias scenario, the probability will be increased for sure if we have a clear breakout today at 24,440 that it has been rejecting since 18th of August. A breakout above 24,440 in next step, the next resistance level to watch will be 24,560. Above it may see a fresh new all-time high at 24,730 next, which is a Fibo extension cluster level. However, a bearish breakdown below 24,155 will invalidate today's bullish bias to see another round of choppy minor corrective decline sequence extending further to retest the 50-day moving average that is confluencing very closely to the next graphical intermediate support level that is being defined by the minor swing low of 12th of August and the former minor congestion resistance level of 5th of August and 7th of August at 23,990. That's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30 that is representing the Dow Jones Industrial Average. So the US Wall Street 30 finally did a push up, all right, and it cleared above our resistance level at 45,455, 45,520, printed a high of 45,765, which is a fresh all-time high over here. Okay, let me put it in writing. All right. So given the fact that the hourly RSI has already hit a extreme overbought level on an hourly basis, so potentially it hasn't exit from the overbought level yet. So there could be a form of minor pullback taking shape during the start of the European session and heading towards the start of the US session today as well. So first support level to watch in this form of a potential pullback will be at 45,455. Maximum will be my Titan short-term pivotal support level for today at 45,280 level. So 45,280 will also be the former minor swing high of 15th of August, now turns into a pullback support. And if we take into account of that Fibo retracement of this sharp impulsive up move, that also constitute very closely the 50% Fibo retracement as well. So as long as any form of minor pullback managed to hold at the 45,280, Titan short-term pivotal support on the US Wall Street 30, we will still maintain our bullish bias on that. Above 45,780 first resistance, potentially see a further push up towards the next intermediate resistance zone defined by a Fibo extension cluster level at 46,060, 46,180. Only a bearish breakdown below 45,280 will negate the bullish tone to see a deeper minor corrective pullback towards 45,100. Maximum 44,900 next. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also continues to do a squeeze up over here, but it hasn't broken above the previous all-time high area on the 15th of August, which is at 6,490. So potentially there could be a minor pullback taking shape as well. First pullback support level to watch 6,440. Maximum for that pullback 6,410, which will be my Titan short-term pivotal support for today, which is coming very close to the rising 20-day moving average. So as long as this minor pullback didn't surpass below Titan short-term pivotal support at 6,410 on the SPX 500, maintain that bullish bias for the next resistance level to come in after 6,490 will be 6,517 next. However, a price action breakdown below 6,410 that will be that would negate or invalidate today's bullish biasness on the SPX 500 to see a retest on last Friday and last Thursday minor swing low area. That is very important. Why? Because the way it bounces off right exactly at this minor medium term ascending channel from the low of May 2025. So that is at 6,370, 6,350. Next up will be the Nasdaq 100. So the Nasdaq 100 almost come close to our resistance level at 23,580 level before shipping that minor pullback and also holding above that 20-day moving average as well. So with that, potentially there could be some form of pullback taking shape during the start of the US session. With the Titan short-term pivotal support for now at 23,380, very similar to the former minor swing high that is being seen on 21st of August on SPX as well. So using a Titan short-term pivotal support level for the Nasdaq 100 at 23,308, maintain that bullish biasness on the Nasdaq 100, a breakout above 23,580/23,660, potentially revisit the current all-time high area at 23,930 in first step. Only a bearish breakdown below 23,308 Titan short-term pivotal support will negate today's bullish bias to see a further slide downwards to retest the last Thursday and last Friday area, which is my medium-term pivotal support zone at 22,960, 22,945, which also constitute with the rising 50-day moving average, confluencing closely also with the former upper boundary of this long-term circular ascending channel drawn from the March 2020 low. So that's sum up the major the short-term intraday technical outlook on the 6 major stock indices. Lastly, let us proceed to the commodities market over here, starting with gold XAU/USD. So given that gold XAU/USD managed to reintegrate back above the 20 and the 50-day moving average, so for today we will flip to a intraday bullish bias, but still within a medium-term complex sideways range configuration. So pivotal support level to watch will be the zone between the 20 and the 50-day moving average at 3,347, 3,352. So as long as 3,352, 3,347 pivotal support holds, flip to a bullish bias on gold XAU/USD, a breakout above the first resistance right now that is a attempt to actually shape a minor pullback, which is 3,373, potentially exposes 3,402, where price action has been rejected since 8th of August this year. However, a bearish breakdown below 3,347 that would invalidate today's bullish biasness on gold XAU/USD to see another vicious choppy downward movement to retest last Thursday minor swing low at 3,324, maximum 3,310, which is the minor swing low area of last Wednesday, as it flowed back down towards the lower limit of that complex sideways range configuration. Lastly will be the West Texas oil. So the West Texas oil managed to clear above our pivotal managed to clear above our short-term pivotal resistance level at the 64.18 level over here, and with the RSI, that hourly RSI that's being supported by a rising parallel ascending trend line support that is taken from the low of 13th of August, 18th of August, we will now flip to a bullish bias on the West Texas oil. So it seems to us that since unable to break that key near-term support at 62.50 on the start of last week, it tested 3 times and managed to bounce higher. It should be potentially doing a mean reversion rebound, seeking up to mean revert towards the 20-day moving average over here. So with that, flip to a bullish bias for this potential mean reversion and rebound scenario to unfold, using 63.85 as my short-term pivotal support for today. 2 near-term resistance level to watch on West Texas oil will be 64.85 followed by 65.60, which is the important mean reversion rebound resistance level, which is the 20-day moving average as well. That is acting as a similar resistance very closely to 65.60. However, a price action breakdown below 63.85 that would invalidate today's bullish bias to see the bears taking forth again, revisiting last Thursday minor swing low at 63.30. A breakdown below it exposes the key intermediate support area or level at 62.50 in the first step for West Texas oil. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes as well. So before we go, let's have a quick look at the economic calendar. What are the key economic event to look out for today? So for today, if we head towards the before the start of the European session, we do have a core Singapore inflation rate for the month of July releasing at 1 p.m. Singapore time. So for those who have interest in the dollar Sing and as well as the Sing rate crosses, it could impact this FX market, but more particular to the dollar Sing and the Sing crosses, and in some form the Singapore 30 CFD index. And during the start of the European session, we have Germany info business climate data for the month of August. So take this as some form of a business confidence index for Germany, so that could potentially influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. Then thereafter, it will be a rather quiet session heading throughout the US session as well. So no key US officials speaking today. And before the start of our daily dose tomorrow at 9:30 a.m., we do have RBA for the previous RBA monetary policy minutes. So that is out at 9:30 a.m. Singapore time tomorrow. That could potentially influence the Aussie dollar, the Aussie crosses rates over here. So with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.